Good afternoon. Sorry, slight malfunction there. My chat wasn't working for some reason. It wouldn't chat pop out, wouldn't work. Anyway, I'm here. Afternoon, Wozcheck. Pete, Paul, Pete. Who's Pete? Paul, Marco, Mumo, Wozcheck again. Happy Monday again. Fletch, Monkey, Mumo. Lee's taking a nap. No, I was just having a funny 5 minutes. Right, let's have a quick look at what's going on. So the markets today not really gone anywhere, as you can see. If you were here this morning, nothing's happened. The only news we've had today, if I whiz that up again, is the GDP for the Swissy quarterly. We've got ISM manufacturing coming up, so PMIs basically this afternoon at 3 o'clock. So let me just shut the curtain a minute. Otherwise, I'd be blinded. The PMIs obviously are a very important purchasing managers index. So potentially we might get some movement off of this. It's difficult to tell what's going on with the PMIs and the CPIs and everything at the minute, because obviously what's going on with the tariffs. So we'll see what happens, but that's at 3 o'clock. So market has opened. The initial moves might be quite sideways until we get those PMI numbers coming in. So we'll have a look and see where the markets are off to at the open. But I get the fit, blimey, they're certainly not hanging around, are they? Wow. Okay, so yeah, big move ahead of PMI. Wow, that's a really big move. Okay, so definitely going to get some trades on. Dow's a little bit more tempered at the moment in the open, so we'll see where that goes. But yeah, we'll see where we go. But I've got a feeling we might sit around for a bit, but we'll wait and see. Bootcamp, I was wondering if there's anything that you could explain differently. Not really. Nothing's changed. Trading, still trading. It's all covered in there, basically. This is all position trading, obviously. So nothing's really changed much, apart from the position trade at EA instead of the market reversal at EA. Trading, still trading. Position trading, still position trading. So can't really add much to it. I am thinking about really doing it again, but it's a hell of a lot of work. Right. So 5 minute ranges are in. The Dow is ever so slightly too shy of the minimum 15%, which I'm trading at the moment. So no trades on the Dow on the 5 minute range. S&P is there. NASDAQ is already long. So long already triggered on the NAS. S&P not quite got there yet. So somebody asked in the Discord group this morning as to whether or not to trade both of these, the NASDAQ and the S&P together, because they are very correlated, as you can see. So you do get very much the same movement on them. But as you can see, NASDAQ's triggered long, S&P hasn't. So although they are correlated in the fact that they tend to move together, they also don't trade exactly the same way. So you will get instances where you'll get a trigger on one and not on the other, as has happened here today. So whether you trade both or not is entirely personal, because you are doubling your risk in effect trading the NAS and the S&P together most of the time. However, when we get into earnings fortnight, you tend to see them diversify a little bit, because tech stocks will get good earnings and other stocks won't, and then you'll find the NASDAQ will pop and the S&P will drop. So it's all to do with movement of individual stocks within the indices. And obviously the main reason they move together is because they share sectors. So within the tech sector, you'll have other stocks in the S&P 500 that feed the tech sector. So when the tech sector moves, their stocks also move. So we do get to sector purchasing and interrelational sector purchasing, which drives them together. But they do diversify. So good example there for whoever that was that asked. I don't even know who it was that asked. Yeah, so we'll see where we go. Market really not able to make much headway at the moment. So quickly looking at where we are. That was the level we put in from Friday. So upside breaks today. Obviously, we are opening bang into yesterday, or rather Friday's high. So we got the Globex high, and then that was the end of session high there. So this whole area here obviously was not able to get traded beyond on Friday. This was kind of where we tapped into on Thursday, and it was the previous level from Wednesday. So if we do break this here today, obviously we've got a fairly big sell order that came in there, which they added to. But other than that, you are not stopping until you come all the way back up into this accumulation break at the open on Thursday last week. So, or was that after the open? Yeah, that's the open there. So that basically is your upside target if we can break long, that is. So, which we just have. There we go, we're out. So, yeah, good upside today. There we are. NASDAQ's through. S&P also triggered long, but not as aggressive. S&P's got a little bit more headroom until we hit the Friday high. So we'll watch for some resistance there. There will be limit orders sitting at high and lower day. There always is. But again, if we break it, we're coming back up into the accumulation drop. So you can see what I mean by the differences. So, on the S&P, we've got that level there, and then the accumulation sits here. If you look at the NASDAQ, yeah, that high from Friday is not there, and the accumulation is a lot higher. So although they do move the same and look the same, they're not the same. Price is very different across the instruments. So whereas this one's got no upside resistance, it will drag the S&P with it, but the S&P might hit upside resistance and stop the NASDAQ from moving forward. So this is why they kind of stick together, but they are very different, as you can see, from a support resistance technical perspective. Right, so we'll see where we go today. Dow Jones 5-minute range is just about to go in. We're inside bar, so again, there's going to be no trade taken on the Dow. Again, Dow doing something completely different to the other indices. It always does. Right, we'll have a look at those in a sec. 20 seconds left on this candle. We are going to close bull, but obviously I'm worried about just doing this ahead of that news in half an hour. So we'll see. Might have some volume. So this morning, ADR wise, we've got quite a few ADRs that hit this morning. we went through the news this morning in the live room. So if you want to have a look at the news that's coming up, obviously I went through all that this morning, but PMIs today, we got Powell speaking, not going to do a lot later, but we've got lots of news this week. CPI, we got GDP, we got 2 interest rate decisions. We've got obviously non-farm payroll as well. So it's a very, very big week. The main focus is being the Canadian rate and the European rate before we get to non-farm. So Wednesday, huge day for interest rates. Thursday, same. Friday, same. Yeah, so it's a big week this week. Swiss CPI could potentially send the Swiss into a downturn if we get negative there, because it means we are potentially going into recessionary figures, because they've had two zeros in a row, which isn't necessarily a recession. It's zero. Negative would be recession, but 3 in a row is indicative of a recession. So they're not really there, but they're not going anywhere, are they? So those interest rates at 0.25 potentially coming down on the Swiss, meaning more negativity. So we'll see where we go. But that's your news. So far today, there's not been any news really. We've had the PMI numbers and stuff come out for the UK and Germany and stuff, but not really done anything. This morning, there's been no other news either. So nothing particularly exciting happening at the moment. Very quiet on the Trump front, so, which is unusual. Okay, so we've closed out into propulsion on the NASDAQ, which is pulling back now. So ideally, just want to sit around somewhere for half an hour and not come back and stop me out. That would be nice. Afternoon, Hub. I'm going to call you Hub now, just to shorten you down a bit. So ADRs today. Euro US dollar. That one's nice hit to the upside. It came straight off resistance. We looked at this one in the live room this morning. The monthly resistance. So we came up there straight into ADR, wicked. We had a bit of strength coming in on that US, but we are attempting a breakout on that, meaning negative US dollar. Obviously, it's a lovely area to take a short from. Monthly high. It's a previous high as well that's been respected multiple times, as you can see. We've hit this price point over and over again and rejected it. We had that little price discovery move which failed. And then since then, we haven't managed to get through that level. So it's attempting to have a crack at that again. So good short opportunity, nicely extended on RSI. We've got a lovely big propulsion gap target to the downside. All these old ones from the Trump moves. And then also you've got the monthly high as a backup, which is about 250 ADR away. So if you take a short there and it doesn't work out, you can scale in a couple of times up to resistance. By that time, it'll be ready for a pullback. So really good short opportunity, Euro US dollar. Pound US dollar, I'm already long on. Already short on, sorry. So there's no point in me taking Euro US dollar because it's going to do pretty much the same as the pound US. So if that Euro US does start to drop, the pound US will do the same thing. So I'm not going to take that one myself because I'll be overexposed. Pound US dollar, as you can see, that's ADR. Yeah, is extended as well today. So we hit 125 ADR this morning. I took another trade on that. So I got into my 5th and obviously looking for a continuation short on this. So the US dollar, as I said this morning, we covered this in a bit of detail this morning, but the dollar is really, really struggling at the moment, and it's looking quite difficult for them to get back that faith in the dollar. There's no reason to buy the dollar at the minute. Trump's shafted the dollar, basically, for the moment. Whether or not it continues, we'll have to wait and see. But that reversal there, they've pulled back into the retest of it. So this is sort of a 61.8 retracement, start of second leg down. So potentially we're going to come back down and look at this area, but we need that strength. So we're looking for some good news this week for the dollar. If we can, that will start to come down nicely, but it's obviously, as you can see, struggling, and it will struggle all the time. These tariff problems are still there until they put that to bed. Can't see any upside for the dollar unless we get a string of really good news events. Then, of course, obviously we might see something happening. But good ADR reversal there. So your 5-minute chart, your reversal alert was there this morning. It's not gone far, but it's held. So that was off of 125 ADR. New Zealand dollar CAD. Again, we looked at this one this morning. This is sat around. Whoa, the hell was that? See that candle? Whoa, there's a massive spread going in on the New Zealand dollar at the minute. So it's just a big order coming in the New Zealand dollar, maybe. No, that's the S&P PMIs. Shouldn't affect the New Zealand dollar, though, really, should it? So yeah, anyway, New Zealand dollar CAD is what we were looking at. So you had an ADR reversal this morning on that one. There's ADR, wicked into it, rejected. That spike there is to do with that S&P PMI number that came in, which we don't really pay much attention to. So some big order came in there. So your reversal on that one again this morning, fairly strong reversal off of ADR, and then obviously the retest and drop. So nice little trade there, but not massively gone into profit. We haven't gone very far today. You've got just over a quarter of an ADR off of it. New Zealand dollar, US dollar, very much the same as the New Zealand dollar CAD. They do the same thing pretty much. So ADR 125, M pattern reversal, but we didn't really manage to get going on it. And we still haven't got going on it. So again, there's just no strength in that dollar at the minute. And US dollar Swiss. So that was you haven't even got a signal on that one. We did look at this one this morning as well. No, we didn't. Don't think that has signaled this morning, but no signal on it basically. So off of ADR though. So beautiful bounce off of ADR. Long term on this one. This is quite a tricky one because obviously what we've got at the moment is this weak US dollar. Potentially, if those inflation numbers come out bad for the Swiss this week, that's going to mean that's negative as well. So a negative and negative means a range. So although at the moment, if we get some US dollar strength coming in, obviously we'll start to rise. We're expecting some Swiss franc weakness as well, which will obviously drive that straight up. But if that US dollar strength doesn't come in, we're just going to kind of flip-flop around. So difficult to call a direction, but we looked at this for a support resistance bounce, and it's obviously invalidated. So that's your next support, but it may well just pop straight back up. So it's extended on the hourly as well. So if you look at the RSI dash, we've got the US dollar Swiss extended on the hourly. So it's a really good, it's an ADR hit and an RSI extension all in one, with a lovely big propulsion gap target to go for. So it looks pretty good for a long, but very hard to get into because it was so strong on the way down. And US dollar CAD on the 4 hour, we looked at that this morning as well. We've got divergence going in now. There we go. So bullish divergence. You are potentially putting in a 3-bar reversal as well on the 4 hour. Look at that. So big, strong push down into monthly low, which is actually Friday's low. Same thing. Also, obviously, low of the week. Nice push into it. Buyers have bought back in. Sellers and buyers battled out. Nobody won. Buyers look like they're taking control. So 3-bar reversal, push back up into propulsion. Thursday's low, even, it's a 4-hour chart, is a good upside target. So that's Thursday's low. That's the propulsion move that broke the low. So there's your sellers. So look for a push back up into there as an exit. 5-minute reversal alert. Went in back here. So there you go. You're off. Good. Right. So those are all your ADRs and RSIs. US dollar Swiss, obviously, that is also a 4-hour. Again, 3-bar reversal potentially going in on that rejection wick. We are extended. Again, you've got a little bit of divergence creeping in here, look. So higher lows going in, lower lows on price. Bullish. Right, Nasdaq's pulled back inside range, holding on propulsion. S&P, same thing. So looking like we might get a stop out on this. Short on the Dow, so I'm hedged. Great. It's going to be one of those days today. You know, you get the feeling. I had this feeling this morning in this morning's session, and I said, I got this feeling it's going to be one of those days today. I reckon we're going to get 6 to 8 stop outs today. It's just going to be whipsaw after whipsaw after whipsaw. We'll see. But if I'm short the Dow and I'm long the S&P and the Nasdaq, at least one of those is going to fail. You can't go short on one and long on the other two. One's going to drag the other two in that direction, or those two are going to drag the Dow up. Either that, one of those two is going to happen. So either the Dow's definitely going to stop out, or there you go, the S&P stopped out. And the NASDAQ probably will do as well. What a day. Powell speaks today at 7. Yep. So Powell, obviously at the moment, all the Powell is saying is, tariffs have destroyed our plans, basically. In a nutshell, is what he's saying. This is why him and Trump have fallen out, because Trump's calling him too late all the time, says he's too slow to react, doesn't do what he should do, he's crap at his job, blah, blah, blah. Great way to treat the head of your Fed. But so basically he's just having a go at Powell all the time, saying you need to drop interest rates. Powell's sitting there going, if I do that, the economy is going to collapse. What do you want? So obviously those two aren't getting on at the moment. So Powell's only stance he can kind of take at the moment is we'll be data-led, and the tariffs are hurting our plans. Therefore, we cannot give any projections, basically. Same old stuff's going to come out of his mouth until those tariffs are sorted, because as long as they're in the air as they are at the moment and nobody's agreed to sign any deals, we have no idea whether we should be buying or selling the dollar. Yeah, the Fed cannot plan economically. Therefore, they cannot do anything. So anything they say is going to be hearsay, and the market can't really take an awful lot of faith in anything Powell says, because you can't have an economic plan when 1 week you got 10% tariffs, the next week you got 135% tariffs, and then the week after that you got 0 tariffs, and then a government ruling comes in and says, no, we got 10% again. What do you do with that information? Nothing. You can't. So they are going to literally have to react to CPI numbers, which is why these PMIs are so important today, because Purchasing Managers Index feeds into the Consumer Price Index, which is what Powell uses to determine inflation direction. So to determine interest rate direction. So he can't make any decisions. So I doubt very much whether we'll get anything impactive out of that today. So flip short on the S&P, stopped out NASDAQ, Dow short, big short. Large volume coming in. Playing catch up today. We've got 8 minutes until news. Could really do with the news dumping the markets today. So Globex low on the S&P is a good target to the downside, which is just shy of Friday's low. Is that Friday's low? Why is the indicator not showing that? Because I haven't got it turned on. Don't want weekly, don't want monthly. So there's your low from Friday. So downside target, I would say Friday's low is an easy one. NASDAQ, we haven't broken short on that yet, but when we do, if we do, assuming the S&P continues to drop, that's going to be a horrible trade. Very high probability of a pullback on that. Same thing. Globex low, good target to the downside, and obviously Friday's low. Why have I not got that turned on either? I could have sworn I did this last week. Just turn the weekly off from the monthly. I don't want those. So yeah, downside target looks good. Dow. So Friday's low and Globex low are coming up now. And then obviously we've got Thursday's low, which is last week's low. So as a downside target, any close around here is likely to find some support. Failing that, we are going to break down. That's your weekly low. All the way down there, but there's all these propulsion gap targets. So this is what they rebought on Thursday, this move. But I reckon they'll come back down and test this. So I think we've got potentially, if it does drop today, we've got a fairly decent move to the downside. However, that's the question. we are or are not going into a bear market, which we covered again this morning as well. So obviously this rejection that we had and this reversal that we had put in on Friday last week, or rather today, actually, I think the reversal actually triggered. No, it was Friday. So yeah, we triggered on Friday the reversal alert. We've got the gap to fill here. So a short run down to that gap fill, that then gives them the chance to get that inefficiency fixed and then basically either go for it or come down for this gap. If they come for this gap, they've got to break that weekly low. If they break that weekly low, you're confirming an M pattern reversal, which means the market will suddenly think, holy crap, we're going into a bear market, and then stocks will get sold off and it will just happen. So we will see. Again, I said it 2 weeks ago. I said it last week. This is a critical area here as to whether or not we are going to take that high out. If we don't take that high, we don't take those propulsion gaps, this is looking like a rundown for the bear market, which is what a lot of analysts are calling at the minute. COVID recovery 2.0. Right, we have 4 minutes till news. So I'm just going to watch the Dow and we'll watch the S&P. I've got a funny feeling they're clearing the decks up and down ahead of this news, and they're going to wipe everybody out today. I'm just going to go into rotation. Let's hope it's negative. Is there a 3-bar reversal on the euro US dollar? 4 hour. Not yet. Potentially. So we've got another 3 hours left on this candle. So obviously if this candle closes bearish, you've got a 3-bar reversal there. So push, pause, pull. But you're pulling straight back into propulsion. So there's potential for that. Again, this is all down to this guy. You know, there's no strength in that dollar. So, you know, 3-bar reversal was a brilliant pattern. There's a 4-bar reversal there. But obviously, in context, it's at the high, which is great. So you want a signal to arrive after a strong push to the upside because it's an exhaustion signal. However, kind of in an uptrend at the moment. So you've got a bearish signal against trend. So, but it's a good one. It's the kind of shoulders of the head and shoulders breakdown, but that failed. So, you know, that head and shoulders did not turn into a trend reversal. Difficult. Right. 1 minute till news. If anybody's got any other pairs they want to look at, let me know. I did go through them all in the live room this morning, but I will happily look at any. Nothing I can bank at the minute, unfortunately. Might be able to get something banked this afternoon if it decides to move. Who knows? So S&P's holding at the minute. So those S&P numbers, the S&P PMIs were 52 against a forecast of 52.3, which is previous. So they weren't forecasting a drop. So the Purchasing Managers Index for the S&P report has dropped, which means potentially it may well drop for the main PMI numbers. So if that is the case, we could see quite a swift downturn. So I might actually just get ready to close some partials manually. Because the NASDAQ is going to also trigger into a short if it does go. So I just want to not be too over leveraged. As someone who's almost 10% drawdown on the US dollar Swifts, do you think I am naive for hoping the news will rescue you? Yeah, we'll have a look at that in a sec. Okay, there's news. Gap down. S&P has frozen. Boing. Okay. They're negative numbers, I guess. Waiting for those to come in on the financial juice. So NASDAQ's probably triggered short. Yeah, NASDAQ's triggered short as well. Okay, so there's your Globex low gone. NASDAQ, Dow, Globex low's gone. Friday's low's gone. Okay, I'm closing partial on the Dow just so that I can take some profit because I've got 3 shorts on now. I'm going to take a second partial if we close below Thursday's low. So that's Thursday's low, which is kind of the low of the week. If we break that low of the week, the market could well just flush today. So I'm going to take a second partial on a break there. And then obviously this is already trailed into a break-even position, so I can't lose on the Dow. So just taking a partial on that to drop the risk. Just because that NASDAQ's quite tight with a stop. Quite a big range today. So obviously when you've got a large range going in, actually that what's that taking a trade on that? 1533. Oh, 6-bar range is no good. Okay, yeah, so that is the 5-minute range low, isn't it? Yeah, so ignore that. That's the 6-bar range. So yeah, that's the 5-minute range. So obviously, because we had the really big initial range going on the 5 minutes, the stop losses are quite tight, which always worries me when they're like not sitting close to the edge of the range, because if you get any kind of whipsawing, you run the risk of obviously just getting stopped out on a normal pullback type move, which looks like it's happening, unfortunately. So might be a bad day today, but never mind. And exactly what I was saying this morning, I wanted to try and get rid of that because it was the only red I had on my entire P&L. So like this morning, we were like fully green. Every week was green apart from that one little week. Trying to get rid of that and nudge it off the bottom of the board. But today has ruined it. Ruined my art. Looking for a green instead of a red. Right, we'll let that play out. So let's just quickly look at those numbers. So there you go, big red, lovely. So 69.4, it's not that far out. It's 0.8 differential, so it's not actually that big. 48.5 on a 49.3. So again, not massive. So it's a 0.3 differential. They were at 48.7, expecting Purchase Managers Index to go up. It's come down, which would indicate negative CPI potentially. But again, this is a little skewed because the purchasing managers will have been laying off purchases because obviously the trade tariffs have been in place. So if you're buying anything overseas, you don't really want to buy it now with this extra 10% on and all the extra cost you've had if you're buying from China, etc., until they were all paused. And then all of a sudden you're like, okay, well, we can buy now, but it's still more expensive than before. So let's run our stocks down and wait until we know what's happening with prices. So whether or not these figures are accurate and an accurate reflection of what business is doing, we don't know, because business could be ticking along as normal, just depleting its own stocks. and not buying anything. Again, it's very difficult to call with any data that comes out at the moment. This is the problem Powell's going to see. These numbers aren't going to be reflective of normal conditions in the market because we are not normal anymore, are we, with the new tariffs in place? So, okay, that 5-minute bar's in. So we'll see if we get a continuation short on that. So quickly look at what the dollar's done. We'll have a look at that US dollar Swiss. There you go. So weak US dollar. Again, no reason to buy the dollar, which is lovely because my pound US dollar is going to be going up again as well. So good luck with those 3-bar reversals. Don't think you're going to get them. Euro pound is moving off the back of that. There's my target. Okay, so it looks like I'm going to hit target on the euro pound. Do I want to get out there? I've banked it twice. Not going to be a lot of money, is it? So this week we got the euro news. I will get around to your US dollar Swiss, don't worry. Got the euro rate coming out on Thursday. So we've actually got 3 days of potential movement before that euro news comes out. So the reason I was getting out there, I put these TPs in place this morning, was just to basically close all 3 of those trades out here because I've banked an ADR on it twice. So I've already banked $250 odd on it. So it's paid me. So what I was planning on doing was just getting out on a double top of the weekly high and in that propulsion move, which is the break of those lows. So obviously if we come back up to there's a high probability we're just going to bounce it. So that's the plan there, to get out on that. I just seen the size and the speed of that move though, which is kind of making me think twice. But equally, I'm thinking if I don't take it and it does that, all I'm going to do is get a break even. So I'm just going to leave it. It's going to be very little money, but money's money. And it also reduces my exposure ahead of the euro announcement because I've already got a euro on with EuroCAD. So US dollar Swiss. So you're in 10% drawdown. Which way are you trading though, Robert? I presume you're trading long. Yeah, so I guess you got caught out on that, but you didn't make your exit there. Depends. Where's your average? I mean, you've got two. There's multiple things playing out this week for the US dollar and the Swiss. So, yeah, if you've missed your exit, I was going to say that was your exit as a 50% retracement, almost. Well, not quite, but you should, with any position trade, you should always, yeah, it is a 50%. So you should always be trying to get out on. If you get into a trade and it doesn't work out and you go into drawdown on it, you should always be looking to get out in the closest propulsion gap above your average price. So for me, for example, with the pound US dollar, yeah, there's my average. Yeah, red line. So what I'm looking for is an exit here, this propulsion gap. There's a little one there, but this one makes me money. Yeah, and it's a big one. So my target exit is here. So I could get out in this propulsion gap, but obviously that's above my average price, which makes me a loss, which I don't want to do. So that's my target propulsion gap. So that's where I'm aiming to get out. So with that US dollar Swiss, you got a 50% retracement on this leg there into that propulsion gap. It completed that propulsion gap. It completed that propulsion gap. This one is where they sold it. So this is all part of this one big move. So this is one massive propulsion gap here. So that is where I would have, I mean, I probably wouldn't have exited the whole thing there. I may have done, it depends on my exposure, but I certainly would have taken some off and then I would have added it back on again or be adding it back on again now. So if you missed your exit, that's taught you that you should always take your exit. Yeah, but I mean, the Swiss numbers when they come out, if those numbers are negative, if it's 0.2 or lower, that is going to weaken the Swiss franc, which is going to make US dollar Swiss rally. We've just had really bad numbers on the US dollar, though, which is obviously dumping the dollar. So it's whether or not the market pays attention to PMIs, which we'll have to wait and see. So I don't think anyone on the planet can answer the question, are we going to get some aggressive moves on the dollar? Because I don't think we know, because we've never been in this situation before, have we? We've still got these 90-day pauses on tariffs. When those 90-day pauses are up, in theory, all tariffs that were paused will immediately come back into action. Yeah, if that happens and there are no deals, we cannot trade with the US. Neither can anyone else, and certainly not China at 100 and whatever percent that goes to. I don't think it will happen. It's very unlikely. He's got to get deals in place of some description or back down in some way before that happens. I can't believe that we're going to dump the dollar, the rest of the world, but I also can't see a way that he can make it better. So I don't know. What I would say is you got that low, you got that high. Hopefully you're putting in a higher low in propulsion. And if you get back up there, I would just scrap it, get out. Also, as Ro has just said, aggressive drawdown control. So depending on where your average price is on this, obviously look for areas to do aggressive drawdown control. So that's not a great propulsion gap. It didn't really break a level. But if you get back down to here, which you've already been at, obviously if you're in 10% drawdown there, it's going to be a lot more when you get down there. But if you do get back down to there, that is where I would get in with aggressive drawdown control. So when you get down into this level, so just look into the future of a strong price action move down to here. That is what you've put in as a downward momentum. Yeah, so 2 weeks worth of selling. When you get here, the buyers that stopped price action here and moved back up are going to want to add to that position because they probably haven't got to where they wanted to be and they've been pushed back down again. So there's going to be buyers sitting here. Use them to your advantage and put an aggressive drawdown control position on and try and get some really good size on there to get that average down really tight and get out. But it may not happen. We might just sit around. We've just, for the first time, broken those lows in the last 24 hours, straight into that batch of buyers that drove that market structure higher. We got back down here. We bought it. We've bought it a couple of times in this area over and over again. But it's impossible to tell with the dollar at the minute. There's a billion theories flying around about what's going to happen next. Nobody knows anything. It's like COVID 2.0. We haven't been through this situation before, so. But like anything, if you're uncomfortable, get out. Yeah. If you are feeling the pressure, take half off. Just do something to make it easier. Is all you can do, really. If it means taking a loss, take a loss. Gutted. Stopped out the NASDAQ. It is going to be one of those days today. You watch. It's going to hit that propulsion gap. It's going to tank and make a new low. I'm going to stop out on the S&P without even banking as well. So I'm stopped out the Dow. So I'm going to leave the S&P running. It's my only hope of making some profit today. I'm not going to make any profit today. It's going to be a lost day. But the only way I can make profit today is if this absolutely tanks by one ADR. And I mean proper tanks by an ADR. Which obviously Robert will not want to happen because that will mean the US dollar will be collapsing as well. Yeah, just unlucky price action today. Just whippy this morning. Just too big, too swoopy and volatile today. So going to be a down day. It's okay. We'll get it back tomorrow. We'll see what happens. If I can get half of it back. You just mentioned I would have taken profit and then added it back. Do you write down your thoughts? No. You look at 28 pairs. How do you keep track of this? How do I keep track of what? Everything I do is automated, Marco. So I don't need to keep. I mean, this keeps track of everything for me when I'm position trading. The EA takes all the trades for me, so I don't have anything to keep track of. But I look at my charts. So basically, all I'm doing is I'm looking at this. I'm waiting for this to flash green or red. If it flashes red, I deal with it. If it flashes green, I will look at it and decide what to do. Trading is all about alerts. There's absolutely no point in looking at stuff and planning anything in any detail until you know what everything else is doing. If you don't approach trading as a portfolio approach, you are trading a single instrument, then that's fine. Nothing wrong with trading single instruments and becoming an expert in one thing and just trading one thing. It just limits your opportunity, basically. But if you're trading a portfolio, you need something to keep track of it. And that's what this does. This just literally keeps track of what's going on. And I act on that. But I would have got out of a partial on the US dollar Swiss up here, because I would have seen whatever trade I had on here or wherever this trade was, would have been sitting around doing nothing, and then it would have gone up into a position where it would have flashed green on my dashboard. Over here, it would be flashing green at me saying, I'm a big amount of money, take me. So I'd have taken it. Same as I did with the pound US dollar. Look, so yeah, that trade there, I took off here. So we got back to here. We hit this propulsion gap and it looked like it was reversing and it was a big green amount of money. So I took it. And now I've added it back on again. I've just added it on a little bit lower down because the price action there meant that I couldn't get an entry, but the price action here today has hit ADR. It means I can get an entry. So I'm adding it on again. And if it now pushes down to here, I will probably take that one off there because it'll be flashing green at me. I'm very close to my average and I'm worried about a bounce out of this area because this accumulation break there is added to. So if they get back to here, there's going to be buyers. So that will be my TP on that there. But I'm not going to set a TP on it, a hard TP, because I have the luxury of being able to sit in front of my charts and watch this all day. And this thing flashes at me. I don't need to track thoughts. I look at charts. But if there's a million ways to do this. If you think I can't do that, do that. Yeah. So that is $173. So for me, that would be a green square. If you want to take it automatically, take it automatically. Suppose putting a TP there. But all I would say is if we get down to here tomorrow and news hits and this thing goes bang, you've just taken profit there, whereas you could have been out of the entire position with a lovely profit down here if you hadn't have put a TP in place, because you're not allowing your winner to run. But one of them's right, one of them's wrong. Depending on what happens with price action over the next 48 hours, we're not going to know which it is. This is where your decision-making process comes in. You can't decide what to do because you don't know what the future is going to bring. I've got a very small account, so I limit myself to 2 pairs. Yeah. I take this, take 2 best pairs, first opportunities. Yeah. Just make sure you're diversified. Just seeing, got some Fed talking head coming in. Logan is speaking. Yeah, so if you're taking 2 pairs only, just make sure that you're keeping your portfolio diverse. So try, if you're going to run a 2-pair rule and you're in Aussie CAD, for example, do not take any more Aussie, do not take any more CAD, do not take anything that is correlated with Aussie CAD. Yeah, so don't take Aussie US, don't take New Zealand dollar CAD, for example. They're all correlated and do the same thing. So focus on a pound pair or a euro pair crossed with yen, Swiss, potentially dollar. Just keep your diversification in, because otherwise you run the risk of getting into 2 things that both squeeze at the same time, because you're doubled up on the dollar and the dollar then goes into free fall. Everything's going to go into free fall. So you're better off taking more trades with lower risk, ideally, because you're going to get more opportunities to make money. I hate NFP week. What's wrong with NFP week? Good. Volatility. Even if I do, I'm following the 2 currency rule. Yeah, so to follow the 2 currency rule. Yep. But the trouble is, the 2 currency rule is there to protect you from overexposure. If you expose yourself 100% to the dollar in one direction by taking 2 trades on 2 currencies, so let's say, for example, you shorted the euro US dollar and the pound US dollar, they're very, very similar in their correlation. So if the dollar suddenly pumps, then obviously those trades are going to work out. If the dollar dumps, those trades are both going to go into drawdown. The problem is you've got no other trades on that you can use to make profit to do drawdown control, because you won't be banking any money, because you will literally just go screaming into drawdown on both of them, and there will never be anything banked. If there's nothing banked, you can't use any of that to do drawdown control. But, I mean, there is no right or wrong. There's just what there is. We've got weak dollar. Dollar's weakening further. Which means... so that's... Oh, no, I've still got one on. What have I got on? NASDAQ. Still in. Not anymore. So there you go. Flat. 2 down today. Can't do anything with that today. Shite day. Just a total whipsaw. Can't really do anything with it. I had it back to like $200 drawdown, but that was worth holding that for short. So tomorrow's risk up to 526. So we'll see how we get on tomorrow. FTMO account will be down as well. Not as bad though. Right, good point. So on a smaller account, it's smarter to not even do the 2 currency rule. Well, yeah, you want to limit your exposure. I mean, this is what the dashboard's there for: is to limit your exposure. Not on that one, because that's not position trading. But to keep track of your exposure. If you're on the pound and it's getting deep, do not take any more pound. Just keep track of what you've got on and trade accordingly. But the trouble with position trading is it's not a strategy you can run on very, very small accounts, because you've got to have enough capital there to get lots of risk on in very small chunks. So you can trade all 28 pairs. Just make sure that risk is reduced dramatically. So half or a third more likely a third or a quarter of your normal risk for each entry. So if you're risking normally 0.25% and you're going to trade every single pair, drop it down to something like 0.1 initial entry. Keep it smaller. Because obviously if like this, this is what I mean, the correlation, euro US dollar is pumping, pound US dollar will also be pumping. They're the same thing. They move the same way. at the same time most of the time. Obviously, there's slight variations in them, but this is moving like this not because of the euro or the pound, but because the eurozone against the dollar, and the dollar is dropping. So everything will be euro Swiss will be. That's not euro Swiss. US dollar Swiss will be moving. So the euro doing well, Swiss doing well, pound doing well, dollar not. However, they're selling the Swissy a little bit at the moment, I think, because of the numbers this week. But there are multiple correlations. I think Robert's question is good. I always try to avoid overexposure, but I'm never quite sure what pairs to exclude. So all you could do is look at a currency correlation chart, basically. You've got these. We've done a session on it. You're in the members, aren't you? If tariffs change inflation expectations, that would be significant. Again, just letting Trump know that he's in charge of interest rates, not the Fed. We did a session on correlation. Wrong one. Didn't we? I thought we did a session on correlation. Maybe we didn't. We definitely went through correlation, though, because I remember going through it. So this is the one that's best to use weekly. So, just look at the currencies with higher and lower correlation than sort of 70%. So if something is 30. Yeah. So anything that you see in red or green here, basically anything that's in green is highly correlated in the same direction. Anything that is, actually, I need that both on 70. Hang on. Oh, that's not going to work. How do I do this normally? I can't remember how I used to do it. But anyway, so anything that's like Aussie yen and Aussie CAD are 72% correlated. They both do the same thing at the same time, 70% of the time. So that's all right. Anything that's 90% like that, Aussie dollar Swiss and the Aussie dollar yen, you're trading basically the Australian dollar against a safe haven, and you're trading the Australian dollar against a safe haven. If there's a safe haven run, they're going to do the same thing. So there's no point in trading those two together. So it's just a case of doing an analysis to find out what is and isn't moving together. So these pairs that I'm trading, Aussie New Zealand, Aussie US, Swiss yen, Euro CAD, Euro Swiss, Euro pound, and pound US, are not correlated. So they have less than 60% correlation, positive or negative, meaning Aussie US is just the ADR, meaning that if I was to get into all of these, it's unlikely they will all squeeze me at the same time, because they're all doing different things in different directions at different times. So it is a hard thing to keep track of, and I've got a plan for a correlation, a better correlation system than this, basically. But you just have to kind of play it by ear a little bit, unfortunately. Because correlation changes as well. The euro US dollar and the pound US dollar, if you look at them, that's kind of what we've got at the moment on the euro US dollar. Pound US dollar, yeah, very, very similar. No, almost identical, but it's not quite as deep. It's not quite as high, but it's doing the same thing. That's because the dollar is the thing that is being manipulated heavily at the moment. If, for example, we have something happen in the pound or something happens in the euro that means it goes crazy for a month, the pound US dollar and the euro US dollar will come out of correlation. So they will not do the same thing at the same time. because there'll be something that's driving the euro north and the pound is just sitting around doing nothing. And the dollar, it doesn't matter what the dollar does, that euro is going to kick it regardless. And it's just going to take off. And it's the same as I said with these indices. A lot of the time, these two are, thanks for the follow, whoever that was. Nifty Stinky. Good name. These two are heavily correlated. You can see at the moment they are heavily correlated. But look at the NASDAQ. NASDAQ got to there. The S&P all the way down to the Globex lows. So they are correlated, but not quite the same. These will also go out of correlation. If, for example, the top 5 tech stocks in the NASDAQ all have some kind of injunction slammed on them. For example, the government come out and say, right, anybody in the social media space, we're stuffing you. We don't want you anymore. NASDAQ's going to collapse. Or let's say, for example, NVIDIA and all the chip manufacturers decide, do you know what? We're not going to build in the US at all. We're going to keep everything in China. NASDAQ's going to drop. Or will it pump? I don't know. Depends how the market sees that, doesn't it? But the S&P won't necessarily move. So it's the same with forex, which is why it needs checking every now and again. So these types of websites, if you check them for weekly correlation every sort of 4 to 6 weeks, you'll see if things are falling in and out of line with each other. And you just kind of try and keep a hot list, if you like, of stuff you know is pretty safe to trade at any time and gives you decent exposure. Euro CAD ADR, Canadian dollar, also on the move. Opposite direction to what I want it to go, but anyway. Pound CAD, pushing as well. Yeah. Doing the same thing. I've done correlation on a normal live before, have I? Yeah, I probably did. Your next risk is 500 for every single trade taken? Yeah. On the indices tomorrow, yeah. Okay, that's it. Caught up. Yeah, I'm not going to go through all the pairs because I've been through those this morning. Next short for me on the pound US dollar is a break of the monthly highs, which is last week's high. If we get up there, again, this US dollar might not drop. We'll see. Euro pound on its way to target, still not getting there. Euro Swiss, I can't get into this at the moment. Euro CAD got shorts on, so next short for me, obviously same thing, banked partial. I will add that back on again. There's my next short. So if we get up for a double top test, I'll add that again, take it off again when it comes back down. Swiss yen, can't get into it at the minute. Aussie US. So I said about this one this morning, if we do manage to get up above 125 ADR today, I'll start thinking shorts on this. So we are ever so slightly starting to grind up on it. But again, it's another dollar. So if we do get up into here, that is a very nice extension. That'll be kind of, if we can get up there tomorrow, that'd be perfect. I'll take a short on that. I'd like to see it extended. And Aussie New Zealand, I've got long on this, only first long, so I got out of all the shorts on it last week. And flip long. So either they're going to come test this propulsion gap, in which case I'm scaling in 3 trades down to there and out, possibly 4. Or it's just going to come up and retest this propulsion, which is my target to the upside. Actually, it's not. It's 450, 57. So yeah, I'm going to be looking for it to fill that propulsion gap, really. But I'll see what happens when we get there. Other than that, I'm not looking to take anything else today. So Aussie US is the only thing I'm looking at potentially getting into if we can get up there. But we will see. Right, I'll leave it there today. I'll be back on Wednesday, members stream Wednesday morning, and then I'll back for Wednesday afternoon. So we'll see what happens with these. But yeah, very, very whippy session today. Very difficult to do anything with it. I have got a long on the Dow still available. Oh, that's moving fast. So there's no more trades to take on the S&P. S&P going for a high of the day, look. So all we've done is a V-shaped recovery. So if we can pull back into there and get some kind of rally off, the Dow I will be taking a long on. So potential to risk another 450 on that today. And exit at yesterday's high. And obviously if it breaks yesterday's high, we've got clear air. I've got that high there, which is this propulsion move, but clear air. So there is potential for that today, which will obviously get a little bit of that loss back. But right, I'll be back Wednesday. Anything you need, I'll be in Discord or Telegram. Other than that, I will see you next time. Have a good day.